In today's video, I'll be going over one single wedge patterns that has generated me over close to $8,000 just taking 3 trades this week. And I know a lot of traders currently are having a hard time in October. If you're doing amazing, I know there's some trader doing fantastic this week. If you're a scalper, this week has probably been your best month since this whole month has been trending ups with no retest on a lot of trades. And for some of those new traders or currently traders that are having difficulty trading at all-time highs, hopefully this will give you a little bit insights on how to take a look at the markets and trade a little bit differently and put it into your arsenal. So let's dive right in. So simple patterns is wedge patterns, where we typically see, if you're not a pattern trader, don't click away, hear me out. This is not simply just looking at patterns. Later on in the live demo, I typically always leverage volume profiles and also footprints where it tells the true story of each candles instead of leverage just simple ICT or SMC or even just pattern trader, what you call it. Typically, all these patterns works, but we need to understand why they works, the mechanics behind it, which I'll cover now, and then the psychology. And then later on in the live chart, I'll dive into how you can correlate this and then mix in with footprint and also mix in with volume profile to give you a much higher probability edge. All right. So simple idea, what is a wedge pattern? Essentially wedge pattern that you see on daily basis. Every single day, if you take a look, go back to your past chart, you will see a compressions like this. So let me draw on the right hand side so you can see, let me use this. You can see this type of trend, right? And then if it break out, it go lower, right? And if it go up, we use a different color. If it goes up, break out, it go higher, right? As simple as that. So these type of wedge pattern you can see on higher time frame, lower time frame, and essentially any time frame. And then the reason why I say these are a good pattern to use whenever you're trading at all-time high is because on the left-hand side, you don't have historical records, right? So on the left-hand side, there's no historic records. So you only can leverage what currently you have. When you currently have going down to a lower time frame, which a lot of times I don't recommend because lower time frames don't have too much weight in each price level, right? Each price level only have the weight depending on how many times a certain price has traded to that level, right? Either buyer or seller, that a order is sitting there. Those will have weight. For a new price level, typically there's not much order that you can see that you can trend back towards. Typically, this is why I recommend if you lower to lower time frame, you can leverage wedge pattern, so which you can still leverage within your shortened time frame on the day-to-day basis using just a pre-market. You can still place a trade, a decent trade. Okay, so why do they work? These wedge pattern, you can think of it as a spring, right? It's grabbing liquidity on the top, it's grabbing liquidity on the bottom, it's grabbing liquidity on the top, or liquidity on the bottom at a lower time frame, right? Sometimes you also see the pattern like lower low, higher high, lower low, higher high, lower low, higher high until it breaks, right? All these are getting liquidity, liquidity, liquidity. These are simply just a volatility compressions. These are just volatile compressions until it's ready to choose the directions. Where the smart money concept that they will show the hand, which will be once there's a clear break over here, or a clear break over here, or a clear break over here, whether you're going bullish or bearish. These are just energy. You can think of energy compressed and ready to be released, and where you call it accumulation zone. As simple as that. It's accumulating until you see a break. Until these breaks, we look for some sort of market structure shift or change in state of delivery, or break of structure, or change of character, whatever you call it. That's when you look for an entry once this break. As simple as that. But why, even let's say you are doing that, but why are you still failing on getting stop out and you're taking the wrong side of trade? Most of the case is the trend line one you're drawing is in the too lower of time frame. Typically for all these trend lines that I draw, it will be at least 15 minutes minimum. Lowest I will go is 5 minutes, but typically I leverage is 15 minutes, and I want to see some sort of actually clear break of the body. So in this case, you can see over here, there's a clear break of a body to let me know there is a true continuation lower. Same thing as high. I need the body to close outside of this. If you go down to 1 minute, the wick might see looks like, and let's say this is over here, right? Over here, this is the break. The break might look like a wick on higher time frame, which means that it's not a valid break. But in the lower time frame, you might get a body closer outside of the trend, right? So you might think this is a valid break, which is why I say always leverage minimum 5 minutes to 15 minutes. Don't go anything lower, which I'll show you in the live. Okay, now you kind of understand what is the wedge. It's pretty simple. Now let's dive into the live chart for this week. Now let us take a look at this week price actions and how we should take trades based on this week patterns using the wedge pattern that we have went over, or bear flag, or whichever trend lines, what you call it in your view. Those type of patterns, the mechanics behind it, and psychology, why those pattern works. We don't just blindly trade patterns and draw lines. We need to understand leveraging order flow and also mechanics and psychology of order trader from institution and also retail trader. So we can clearly see this week we have already gap up overnight from Sunday to Monday before the market opened in New York time. There's a huge gap up, and typically what I'm seeing in this environment at all-time high, especially this week, we just been running straight up. Typically we will get some pullback. This week it's very hard to trade for some of the trader, for especially a retest, since there is no retest zone. Okay, so when there's nothing to look to the left, these pattern I find it very useful. They also work during whenever there's a historic, doesn't just work in this type of environments, but this type of environments, it kind of give you opportunity to trade instead of if you can, want to FOMO in, at least don't trade just blindly. At least understand these type of small pattern. When even there's no historical record, you can use just the day records. So using the pre-market to tell us a story, and then based on that, we can place the higher probability trade. All right, now let us dive in. So currently we can see this is the 1 hour. We have a uptrend channel, right? So we have an uptrending channel over here. And then let me dive down to 15 minutes. So you can see we have an uptrend channel over here. And what we want to expect to see is the price will break down over here to take a short entry or continue upwards. Okay, so let us play out. So one thing I'm taking a look here. So my trade will have happened at this level already. So you can see from this, there is a wedge. And then our entry will be at this candle, right? Okay, I'll mark that for now and kind of jump into how will I know to take a trade here. So currently you'll leverage the same thing that you'll be leveraging. There is, to the left hand side, there is a small internal liquidity sweep. So when we understand that there is some sort of liquidity, either you're trading ICT or smart concept, and I'll go over, I typically do not just rely on liquidity sweep. I also look at order flow. But for those of you use liquidity sweep, this is a simplified ways to understand things, to look at it. And one thing I want to point out is, how do I know not to take the price here? Because a lot of time, let's say if you take the price here and then the price reverse on you, right? But one thing I would say recommend is go to 15 minutes and the minimum 5 minutes. You want to see some sort of market structure break. What I mean by that is you need to see some sort of market structure break at this level, and the body needs to close outside of it, right? So I'll mark this out as a market structure break. You need to see somebody close out of this or changes their delivery depending which one you trade. So you can see these candle actually close outside of these downtrend patterns, right? Now you can place a trade when it rebalance into here. In this case, you can also use the OTE. So you can enter at the OTE zone. So you can see the OTE lines up over here. Typically, you can just leave the price here and then stop at this low, right? So if price do want to go higher when it comes to these type of pattern, 90% of the time, this should not retrace all the way down back into the zone. It should bounce straight from here since the buyer pressure is coming in and all the sellers getting absorbed. Okay, now let's dive into what I typically normally see, and I'll show you what we understand. Okay, there's a lot going on, so let me remove some of these. But I'll keep these market structure, liquidity break. Okay, now let me zoom back a little bit over here. So what is the story telling us over here? This is essentially my own indicator of volume, which you have a lot of catalysts. So all these big green bubble, that means there's a lot of buyers stepping in. So there is a buyer and there is a seller in the orange, right? You can see every time when we try to break above this trend line, so all the sellers step in, but when this buyer went up here, right, you should not be entering here. All these buyers getting absorbed by seller, and also this or yellow box or line here, this is the point of control, which majority of 70%, so in the range outside of this, you can see on the right hand side, I have these order profile, volume profile. These transactions are huge buyer. You can see all these are buyers accumulating here. So what we can tell, let me erase this, go over, make this simple a little bit, zoom out to 5 minutes. What do you see here? We have accumulation, just back and forth. Grab this liquidity, as we mentioned before. What does wedge mechanics mean? Wedge mechanics is simply mean you can think of it as a compression, as a spring. It will constantly grab liquidity from both sides. So you'll grab liquidity, grab liquidity, and on both sides. If you enter here, you're fucked. If you enter here, you're fucked. So if you short here, if you long here, right here, you might have to get stop loss already because this is too wide of a stop for you, right? Unless your stop is way too big, and then I mean the risk or reward will be extremely skewed. But anyways, from here you should not take any of trade, even just blindly looking at liquidity sweep, which is why I say liquidity sweep is a simplified way to look at market. If it works for you, work for you. But what really truly matters is the order. What's the auctions theory behind this market, and also why these patterns work. These patterns essentially just fill auction at the top for buyer to continue higher, fill auction to more of the seller stepping in. There's not enough, right? So let me go back into where we can see volume, which I want to go over with this first. Let's just highlight over here a story telling you all these seller is a buyer trying to push above, but there's passive seller in the back end. So if you look at footprint chart, if you use footprint, you can take a look at each candle. There's a lot of passive seller on the side, which is all these catalysts of buyer is not able to push out of the trend, which is fine. So we let it wait, accumulate. A lot of sellers try to sell over here. So a huge seller stepping in, but it's not able to push lower. So this is telling us this is fighting between both bid and ask. There's an auction where this is the point of control, where this is a fair price, right? We do not want to trade a fair price. So we want to wait until a price show us which the directions go, where the smart money come in, where institution big buyer actually show their hand, right? So from here, if we look at 5 minutes, this candle, which is, I say, do not use on anything under 5 minutes or 15 minutes. You want to wait. You can see all these things, all these wick, are just doing the damage, right? It's stopping people out grabbing more liquidity before it chooses the actual directions. So over here, once it actually break out of this point of control, typically when it break out of the point of control and the candle close outside of this point of control, it will go to the extreme of the other end, which is the upper higher the value area high, right? Our value area is going to be point of control above here. Value area low will be below. It will fill those space 90% of time, and you can backtest that on your own. Whenever you have the closure above the point of control, it will always trade towards the value area high or below the value area low, because that's the 70% of the majority trade will stay in within the session, or whichever session that you mark out for volume profile. Okay, so now we're diving back into the volume, what the story is telling you. You can see all these seller is absorbing this buyer, but once it breaks, right, there's no more seller stepping in, to which you will get a reaction of quickly just momentum going towards upwards. And then you can see on the right hand side, if we let it play out, right, when it reaches down here, all these buyers, so this is volume profile, you can see there's a low volume nodes. This will be your entry, right? You want to enter here, and there's a lot of buyer at the bottom that's going to hold this position. So this will be what you call a support zone. what's going to happen next is going to react and respect it. And what do we get? A very efficient price actions. All these seller that step in over here, because there's so much buyer absorbing these selling pressures, it's not going to go lower. So if you place your buy order here, your stop here, this is why I say you should not close below this low, right? Typically, if you want to be more aggressive, you can put it over here. But typically, I like to give it more room to breathe and then just target 2RR, right? So this is a very simple trade, right? That's it, 2RR. That's all you need. But understanding the mechanics behind it, why wedge pattern works so well, is not because, oh, it breaks out. Sure, that's the easy pattern, right? So let me cover that again. If you don't use these volume to tell your story, or volume profile, or footprint chart, this is fine as well, right? But you need to understand, not just blindly, for example, going to 1 minute here, right? I mean, jump to 1 minute. You enter here, what's going to happen? Stop you out. Okay, now it's down here, I enter here, and then went back up, stopping out. You're just going to get paper cut. You need to understand, going to higher time frame, that's number one. If you don't use any of those tools, you need to wait when there's a clear break, right? There is a clear market structure shift where a body of candle, there's displacement. So this leg, right? List accumulation. This leg displays outside of this accumulation zone, okay? This is your clear entry. When it goes back, you can enter here. But typically when this is moving this fast, I want to wait until it retrace. Typically there will be a retrace when you move this up. Sometimes it doesn't, but that's okay. I will rather miss the move than enter up here where my risk and reward is so skewed. I will just let it go, right? But in this case, I'll wait for this entry and then let it go higher, okay? You need to understand why these type of pattern works. If you can leverage time frame, and this will avoid a lot of stop loss that you're seeing. Just wait for least body close and displace outside of these trend, right? These trend, you want to wait and actually have a clear break. That's number one. And then even better, if you are using these type of footprint where you can see the volume, you can actually tell your real story, which is why I always don't just leverage pattern or any ICT or smart money concept, because those are just simplified concept. The true really story that's told behind it that you cannot lie or fabricate it is all these volumes, because those has been transacted through, right? And these buyers could not push above, is getting absorbed by seller. We don't know if it's going to go higher. Same thing at the bottom, all these sellers getting absorbed by buyer, passive buyer. We don't know where it's going. All these is just compressions generating liquidity before it chooses the right. Once the direction is clear, why do you have efficient move? Because all these energy that get generated through it, this is going to just spring it into the direction with momentum, right? And then obviously if you just use volume profile, that's fine. You don't need to have footprint, just volume profile is more than enough. You can tell when it retraces back into here. Let me go back a little bit. Remove this. This is the zone we enter into point of control. Typically when it wants to rebalance, breakout point control, rebalance point of control, it will go towards the volume area high, right? And then it will respect, you can see on the right hand side, all these huge buy order, and then these low volume nodes, it will fill low volume nodes and go higher, right? And that's what we got. All right, so now let's jump in, and I will quickly go through this week. I won't deep dive this type of volume. I'll just use generic what you see using in the 5 minutes and 15 minutes and what you can trade within this week, right? So let me quickly jump over to this week. I went too fast. I already passed 2 days. So same thing over here. This is the 15-minute chart, minimum 15. Like I said, you can see why we use 15. You can also use 5 as well. That's fine. You can see even these when it came down here. If you short here, you're screwed. I mean, sure, it might work for you sometime, but this does not mean there is a shift of market structure, right? Nothing is closed outside of this trend, right? If you open the order flow, I mean, if that order open now, you can see all these sellers are getting absorbed. So many seller catalysts step in, is not pushing lower. What does that mean? That means there's a passive buyer, so you should not be selling here. Simple as that, right? All right, now if you look at using the 15-minute going to 15 minutes, Let me reset this. This is the wedge that you should be trading. Okay. Going down to 5 minutes. Sorry for jumping around. Trying to do this a little bit quicker. So you can see, once this breakout, this is kind of not a full displacement. I want to wait for this whole candle, and my entry will be at this candle over here, right? You can zoom down to a little bit to find entry, but this will be my entry. And then your entry at this top, and then stop at this low, typically will not retrace back into here. And then waiting for 2RR. So this is 2RR. It went to 3RR. This is roughly a 3-hour play. So this is very good enough trade. And then on this day, same thing, 15 minutes. We got a clear break. So this is Wednesday. This is FOMC. So FOMC, I didn't trade this day, but this also have worked. I just typically don't trade on FOMC day because it's very manipulative before even the price is announced. So let me just play through this, and you can see the one's 2 o'clock, right? This is 2 o'clock and 2:30. Typically, some people wait for 2:30, but even it doesn't matter which one you trade. You can use this, and then watch it move lower, right? You can see this is also point of control. Just highlight it again. When it's sent to point of control, it will always go lower, right? You can play around with that. It will, when the close outside of point of control, and also you can use this as a wedge as indicator. You have all these selling pressure stepping in. There's no buyer stepping in at all. When you see all these wick with no buyers, that means there's more sellers in the passive seller that's in the back end. There's iceberg order. Okay, so there's a huge sell iceberg order that's low and just fill, and then huge flush, right? Okay, now jumping into Thursday, same thing. Let me go a little bit faster on this. Go to 30 minutes. Okay, so here I already missed the trade. So the trade happened at 8:30. This day, kind of sad I didn't get to trade this day because I typically don't wake up that early to jump on the chart at 8:15. I always only trade from 9 to 11. This trade happened at 8:15, so when I came in, it already moved down. I was hoping this price will come back into here. So as this go down, I was hoping it will tap into somewhere over here. And then this also aligned with my order block. There's a order block over here. I wanted to tap back in, and this looks like it's going to tap back in, but it never, and then it just flushed. So this day, I wanted to trade on this day, but I didn't. The trade just happened at the pre-market during London hour. So you will have enter at this. This is very clean, very simple, right? If you go into 5 minutes, very simple. Whole body close outside, tap into it. This is a clean trade. This is a very, very, very clean trade. Even here, outside of this high, outside, this is a 3-hour trade, very clean trade over here. And then I believe it moved down very, very far. From my memory, yeah, it did. Okay, so all the way down to, I mean, you won't hold away for this for like 5-hour trade or 4-hour. Typically, I'll just hold it in 2 hours to 3 hours. Okay, now jumping into the last day. Very simple, and then I post this on my chart as well, and I'll kind of step through what I saw as well. And then you can, okay, I kind of missed it. Let me jump back a little bit, and then you can use this as an example. How I leverage volume as well into my trade. So what I was looking at over here is there is a break over here. So if I go in 15 minutes, there is a wedge break over here. Okay, and then on the 4-hour time frame, at this time, so ignore this part. At this time, this candle didn't close. So it was like 1 hour, right? So it didn't close this. Why is it showing? Yeah, it's showing the whole candle. Yeah, so this 30 minutes. In the 4-hour, it looked more like, can't really show the 4 hours. So let's say take this candle out. What I was expecting is this is going to be a liquidity sweep at the 4-hour of the candle. And then let me play this out. Okay. And what I was looking for is my entry. If you take a look, I have the limit order over here, and my stop is at this low. And then target at 2RR trade, so is somewhere up here. So there's, take a look. Where's this? My stop is that is low. And then yeah, my profit was around here, QRR, and my partial is around like 1.5 in the middle. So this was a fair ask, right? But if you take a look what I saw when this play out, let me step back. When I enter here, this is what I saw. There is a lot of order that's accumulated here. And then like I said, typically when you have order that is price going outside of the point of control, typically rebalance over here and continue higher. That's what I'm looking for, to continue higher, and also with the bullish momentum that we have in October. But what I noticed when we start opening, all these sellers step in, right? At least all these sellers step in, and then it is respecting it. So my take is, okay, it is respecting it, so that's fine. But when this happened, when market opened, it flushed right through here. It didn't tap into my stop loss yet. So my entry was over here. My stop was at this low, right? At this low, it almost touched it. But when it went back up, this is where I sold all my contract and then switched to short. This is where I sold everything and then switched to short. And the reason and then my stop is at this high and then at this low, right? And the reason I say this is important, why it's important that you don't just trade patterns mindlessly. I mean, yes, there is the also, if you look at this line up perfectly and tap into here and then reject. This is also why I enter here, because I expect when it tap into here, there is a large volume and also a low volume nodes is going to fill around this area. And you can see all these sellers trying to sell, it got pushed through. And then all these buyers previously, it did not get respected. And you can see on the volume profile on the right, there are just so much seller. And you can see past in my shorts comments I posted that it will immediately flush. With so much seller on this, it should not accumulate here whatsoever. It should be a quick flush, which we did get. So you can see, and we got a quick flush, and I got all out of my position, right? So most of my positions scale out over here, and then my stop at this high around here, and then tapping out my remaining 2 contracts. So when 6 contract here, so around 2 here, another 2 at the bottom here, and then the stop at 2 here. So essentially this day I made only 1 R. But this is more enough. This 2 hour trade would cover this was not even the 1 hour loss. But so end of the day, that was good. Not how I wanted to go for close to Friday, but I'll take it. But this just also show you the importance of understanding order flow. Is more than important just trading patterns, right? Pattern is great, but you need to understand why it does why price moved to a certain direction and not a certain direction. In this case, yes, it could have went up here, but why didn't it go up here? And why did I decide I had the confidence to switch midway and add contract in to go directly short, right? That's very important besides just experience, but seeing this over and over again, you understand why price action does what it does. It's not trying to see liquidity with all these ICT concept. That yes, that is the simplified version to make, if you first begin a trader, that's easy to understand. Yes, it's swiping liquidity up here, right? If you take a look at 30 minutes, it's very easy to see, sure, it swipe all these relative equal high, and then it push lower for market structure shift, and then we have a continuation, right? So later on, we also get market structure shift, came back, tap in, and then move lower, right? This is very simple, but you need to understand, sometimes there will be cases where it come up here, it didn't just sell off here, it continued to move higher. So like this could have been liquidity sweep, right? You could have said this is the liquidity sweep and it moved higher. And what makes sense, right? If it went up here, let me take this, sweep, accumulate, market structure break, and higher, right? This, and then you say, oh yeah, this makes sense. That's why I took a long here, right? I took a long whenever the sweep, I took a long here when it started moving up. That could have worked, right? That could have worked. But most cases, you need to understand when you look at order flow, it'll give you a true picture of where is the actually true buyer and seller coming in. So in this case, you can see when we move up here, there is no buyer stepping in. There is no buyer. There is one big seller over here. Filled, and then we came in here from the volume side. There's low volume nodes. It filled it perfectly and then moved lower, right? And towards the point of control, right? New point of control is created once it's moved lower. It just moved between the 70% range, right? So this is, let me remove everything so this is clear. This is the volume high. If I just take this, right? If I take this and draw from here to here, you can see this is trading between volume area high, volume area low. Move up, come back towards. It will always rebalance, right? It will always rebalance. That's just how price move. It will always move between the 70% of value area, and you can use that as a anchor where the price will go, and also using order flow to see they are a huge seller over here. They're a huge seller, but it's not being absorbed by any buyers. So it means we'll move lower, right? So when move up here, no buyers step in. What does that mean? It's gonna go lower. When there's a huge seller on this big wick, immediately flush. No, there's passive buyer just to fill. Passive seller just to fill these low volume nodes. All right, so that is more than enough of information for you today. But the key getaway is, even when you're trading at all-time high, you can still leverage simple patterns, such as these wedge patterns that you see. It works, but before you just blindly, start drawing all these patterns, you can kind of see it everywhere. All these patterns, it will work, but when you start putting into a life where this doesn't type, there's no hindsight that played out. Everything's hindsight 2020, right? If you don't see this chart play out, do you have the confidence to place this type of trade, right? Not just blindly. You need some sort of backend. Whether you use market structure shift, liquidity sweep, order flow, which I highly recommend. But hopefully this gives you some key insight on how you could leverage these type of trade, looking at short-term patterns to still give you some trade if you decide to trade at all-time high, give you an edge. All right, stay safe and happy trading.